let's continue our ASML deep dive series. This time, let's talk numbers. We'll provide an in-depth financial analysis of the company.
All right, before we jump in, we got to do the usual disclaimer. This is purely for informational purposes. It is definitely not investment advice. We're here to break down the data and really understand the strategic debates around this fascinating company.
Okay, so here's how we're going to tackle this. First, we'll lay out the incredibly strong bull case for ASML. Then we're going to flip the coin and look at the bear case, which is all about those geopolitical risks. After that, we'll ground everything in the cold, hard numbers, check out their long-term vision for 2030, and finally, we'll pull it all together to understand the core tension at the heart of ASML's story.
So first up, the bull case. The argument here is that ASML isn't just another successful tech company. No, it's something much more. It's a strategic choke point. It's a company so critical that the entire global tech industry has to go through it.
And the foundation for that whole argument, it really starts with this one, frankly, staggering number, 100%. That is ASML's global market share for EUV lithography. It's the only game in town, the only technology on the planet capable of making the most advanced chips that power, well, everything, from our phones to the massive AI data centers.
So how do they protect that dominance? Well, analysts have a great term for it, an economic moat. Think of it like a medieval castle's moat. It's not just about having a strong wall. It's about building a defensive system so wide and deep that it's almost impossible for competitors to even think about attacking. And ASML's moat? It's considered one of the widest in the entire market.
So how on earth did they build this thing? Well, it's not one single trick. It's really a three-part strategy that they've been perfecting for decades. First, they're a system integrator. They focus on the really hard stuff, the R&D and the design, while sourcing about 87% of their components from a huge global network. Second, that supplier network is this deep web of co-investment and shared knowledge that you just can't replicate overnight. And third, their software locks customers in. It optimizes how all the different ASML machines work together, which makes it incredibly expensive and risky for a customer to even consider switching.
And what's pouring fuel on this fire for the bulls? You guessed it, AI. As ASML's own management says, AI is the main driver right now. The AI revolution needs an astronomical leap in computing power, and that means you need the most advanced chips, which, you guessed it, can only be made with help from ASML's EUV machines. It's a massive, long-term demand driver.
All right, so that bull case is pretty compelling, right? But now we have to flip the coin. Let's talk about the bear case. And what's interesting here is that it has almost nothing to do with ASML's technology or its competitors. It's almost entirely about one thing: geopolitics.
And at the absolute core of that risk is just how geographically concentrated their sales are. Look at these numbers for 2024. Nearly 3/4 of all their sales came from just 3 places: Taiwan, South Korea, and China. That's a massive dependence on a few, very geopolitically sensitive regions. And this concentration, well, it exposes ASML to a whole storm of potential problems. We're already seeing it with escalating export controls from the US and the Netherlands trying to limit sales to China. There's always the threat of new tariffs popping up, and maybe the biggest long-term risk is this idea of a split tech world, where China is forced to develop its own alternatives, which could, over time, shrink ASML's total market.
Okay, so we've got this near-perfect business on one side, and a very imperfect, messy world on the other. So how does this tug-of-war actually show up in the numbers? Let's ground this whole debate in the financial reality.
All right, looking at the data, you see this story of really solid growth and these incredibly strong, stable gross margins sitting above 50%. That's fantastic. But the number that just jumps off the page is down here at the bottom. Check out the revenue from China. It exploded from just under 3 billion euros in 2022 to over 10 billion in 2024.
Yeah, I mean, just look at this chart. That surge is wild. But it wasn't just your standard organic growth. This was largely driven by Chinese companies pulling in their orders, trying to buy as much as they could before those export controls we just talked about got even tighter. It's a perfect example of geopolitics directly messing with the sales numbers.
And this brings us to a really crucial point for the near term. It's like a tale of two completely different years. For 2025, management is super confident. They're guiding for strong growth, all driven by that AI demand. But then you ask them about 2026, and the tone just completely changes. They literally say they cannot confirm growth, and they point directly to that fluid geopolitical situation and customer caution.
But, despite all those short-term jitters, ASML has also given us a pretty compelling and ambitious long-term financial picture looking all the way out to the end of the decade.
They're projecting that by 2030, their annual revenue could be pulling in anywhere from 44 to a whopping 60 billion euros. And what's just as impressive, look at the gross margin targets. They expect those to expand significantly, up into the 56 to 60% range. That points to some incredible potential profitability.
And this isn't just wishful thinking. They've got a clear roadmap for how to get there. The single biggest driver is going to be the EUV business itself, thanks to productivity gains and, this is critical, the transition of their next-generation high-NA systems from being an early-stage cost into a highly profitable product line by the end of the decade.
So, when you take a step back and look at everything we've talked about, what's the big picture here? It really boils down to this one simple, powerful conflict, a virtually perfect business model that has to operate in a very, very imperfect world.
So let's put it all side by side. The entire debate comes down to this. The bull case is all about that monopoly on a critical piece of the AI revolution, backed by a powerful financial engine and a clear growth path. The bear case, on the other hand, says, yeah, that's all great, but you can't ignore the fact that this business is tangled up in unpredictable geopolitics and faces real risks from its customer concentration.
And this leaves us with the central question for anyone analyzing ASML. How do you weigh this incredible, almost flawless business model against the very real and unpredictable risks of the world it operates in? How do you balance those two things? And that's for today's video. Let us know in the comments if you'd like to see other specific angles for us to dive deeper into ASML. See you soon.